So, good day everyone. I am Phoebe Romea from Bisak 2-1 together with Aliza Jade Vargas and Knight Matthew Cruz para mag-report and mag-discuss ng Chapter 13 Accounting for Income Taxes. So, bago tayo mag-start ng ating discussion, alamin muna natin ang chapter overview and objectives. So, number 1 is the difference between the accounting income and taxable income, including how they are determined. Number 2 is high-level idea on the taxation system in the Philippines. Number 3, the types of differences between the amount of accounting income and taxable income. Number 4, the computation of total tax expense and its components. Number 5, the subsequent accounting for deferred taxes using the balance sheet approach. Number 6 is the recognition of income tax outside profit or loss. So, number 7, the accounting for net operating loss carryover and changes in tax rates.
Accounting for income taxation. So, gaya nga na napag-aralan natin sa taxation, it is an obligation imposed by the government to country's citizen or resident. As an individual na kumikita ng pera, isa ito sa tungkulin nila na bayaran. So, nabanggit yung term na income tax. Lahat naman tayo na-encounter na to sa taxation subject natin. Kaya lang dito, hindi siya more on computation ng mga income tax due or expenses. From the topic itself, ang scope lang nito ay paano ba dapat ina-account yung income taxes.
Next is determining the accounting income and taxable income. So, bago natin alamin yung iba't ibang standards ng accounting income and taxable income, atin muna alamin kung bakit mahalaga na malaman natin yung differences ng dalawang to. So, may mga times kasi na hindi nagkakatugma yung accounting income and taxable income dahil nga magkaiba yung standards na sinusunod nila. So, dahil dito, may mga uh, may mga items sa financial statements na hindi naman nire-recognize pagdating sa pag-compute ng taxable income. So, dahil dito, kailangan natin na magkaroon ng reconciliation para magtugma ang accounting income and taxable income. So, unahin muna natin yung determining the accounting income. So, as we solve problems nga in intermediate accounting, may sinusunod tayong standard which is yung General Accepted Accounting Principle or mas kilala natin sa tawag na GAAP. So, in determining accounting income, we should apply only the accounting principles na applicable doon sa isang scenario or situation. So, makikita natin dito sa PowerPoint yung iba't ibang accounting principles or concepts na ina-apply natin for us to determine the accounting income. So, hindi ko na siya babasahin pala. Kayo na lang magbasa, no? So, next is yung determining the taxable income. Kung may sinusunod tayong standard when it comes sa accounting, meron din tayong sinusunod na standard pagdating sa taxation. Isa sa mga standards ng taxation ay yung NIRC or yung the National Internal Revenue Code. So, makikita dito na nakabase ang pag-compute ng taxable income sa mga tax laws or mga laws or provisions na binababa ng isang bansa. So, kapag accounting income ang pinag-uusapan, ang standard nito is nakabase lang sa accounting principles. Pero kapag taxable income naman, nakabase lang ito sa tax laws.
Primer on Philippine income taxation. So first, i-identify muna natin if yung income ba is taxable or not. So kapag hindi naman taxable, edi wala naman siyang current or future obligation na dapat bayaran regarding sa tax. And kapag taxable naman, magiging subject yung income into final withholding tax, capital gains tax, or regular income tax. For final withholding tax, subject dito yung mga passive income like interest from bank deposits, interest from government securities, dividend income, prizes, royalties. So, ito yung mga income na hindi naman totally pinagtatrabahuhan ng mga tao, pero kumikita sila. The rate for final tax is from 4.50% up to 25%, depende kung anong kind of passive income yung itatax nila. For capital gains tax, dito naman, it's either the income is from the sale of share of stock or sale of real property. Kapag ang income ay galing sa dalawang yan, ang basis ng pagtatax ay capital gains tax. So, for the tax rate, difference between the net proceeds from the sale of investment in domestic equity securities directly to the buyer and the original cost of investment, the related tax is 15%. Selling price of real property, land and or building, classified as capital asset for taxation purposes, related tax is 6%. For regular income tax, it applies to all items of income tax except those that are subjected to final withholding tax and capital gains tax. Kapag hindi naman na-meet nung specific income yung criteria for final withholding tax and capital gains tax, edi ito yung gagamitin to tax that income. Yung current tax rate ng regular income tax are 20 or 25%. For the computation of regular income tax, first is the gross income. Hindi kasama dito yung mga income na subject sa final withholding tax and yung sa capital gains tax. Then, ilalas yung allowable deductions. Magkakaroon tayo ng taxable income. Then, imumultiply lang yung regular income tax rate na dapat natin imultiply. And then, makukuha na natin yung regular income tax expense.
So, i-discuss muna natin yung permanent differences. So, permanent differences, these are differences that do not have any current and or future tax consequences. So, ito yung mga items sa financial statements na never malilink sa taxation or hindi kailanman siya magiging included sa pag-compute ng taxable income. So, for example, yung kita natin mula sa insurance proceeds, no? Halimbawa, nagkaroon ng fortuitous events, nagkaroon ng lindol, then nasira yung mga properties ng isang business or ng isang company and meron siyang insurance doon, syempre makakapag-claim siya ng proceeds, no? So, sa pagdating sa accounting, syempre, i-recognize tong claims na to from insurance sa kanilang financial statements. Pero sa POV ng taxation, hindi siya mare-recognize kasi hindi naman natin tinatax yung mga claims or proceeds na natatanggap natin from from our insurance. So, isa siya sa mga example ng permanent differences. So, basahin nyo lang dito yung iba pang examples kasi self-explanatory na rin naman siya. Next is the taxable differences. These are differences normally arise from timing differences that will have future tax consequences. So, yung temporary differences naman is yung mga items sa financial statements or accounting na possible na mare-recognize din sa taxation in the near future. So, katulad ng example ko kanina, may mga receivables ang isang company na nire-recognize na siya agad as income, pero hindi pa siya nire-recognize agad sa taxation. Once na ma-convert natin itong mga receivables na to into cash or cash equivalents, doon lang natin i-recognize na ito ay isang income sa POV ng taxation. So, kumbaga yung temporary difference kasi, ito yung difference na temporary lang. So, hindi man siya kailanman or never siyang magiging iba between sa accounting income and taxable income.
Reconciling accounting income to taxable income. So here is the general format for it. First is yung accounting income natin. Then, i-add natin yung non-tax deductible expenses. So, di ba nga expenses, nakakabawas dapat yun sa income ng entity. Pero kapag sinabi kasi ng BIR na bawal yun i-deduct, kailangan natin siyang i-add back. Then, ilalas naman natin yung non-taxable income. Since i-convert nga natin yung accounting income into taxable income, need natin tanggalan yung mga income na hindi naman talaga dapat masasubject sa tax. And then, makukuha natin yung income subject to income tax. Tsaka natin ilalas doon yung income subject to final withholding tax or capital gains tax. Ilalas natin dito yung mga yun kasi nga for regular income tax lang dapat to. And then, saka natin makukuha yung income subject to regular income tax. I-add or less naman natin yung temporary differences. For temporary differences naman, i-add natin kapag ang future deductible amounts since sa future pa dapat to mabawas. For future taxable amount naman, ide-deduct natin siya since hindi pa naman dapat yon masubject into tax for that period. Saka natin makukuha yung taxable income subject to regular income tax for that current period. So, for our illustration number 1, ganito lang yung ginawa. Net income before tax natin ay 5,500,000. Then, nag-add ng 1,200,000 since non-deductible expenses yun. And yung non-taxable naman na 800,000 ay dinaduct from income. Then, inad yung temporary difference na 400,000 since taxable siya upon receipt. And accrued income ay nila since taxable lang siya kapag na-receive na. Prepaid insurance ay nilas din since tax deductible nga siya kapag nabayaran na. And sabi sa problem, it was paid already on December 27, 2023. Then, yung excess tax depreciation na 250,000, kaya ang taxable income na lang na subject into regular income tax for 2023 ay 5,150,000.
Usapan na naman natin ngayon ang components of total tax expense. So, ano ba yung total tax expense? Total tax expense is composed of current income tax and deferred income tax. So, unahin muna natin i-discuss kung ano yung current income tax. So, kapag current income tax, ito yung straight up tax na kailangan nating bayaran based sa ating actual income ngayon. So, yung mga type ng current income tax is final tax, capital gains tax, at regular income tax. So, ito yung agad-agarang binabayaran nating buwis mula sa ating income na nare-receive. Whereas, yung deferred tax or deferred income tax, ito naman yung mga tax na kumbaga nagkakaroon tayo ng installment plan sa tax natin. Dito nagre-reflect yung mga adjustments natin sa income na hindi pa siya nire-recognize as taxable pero magiging taxable lang siya once na magiging taxable lang siya in the near future. So, yung best example nga nito is yung temporary differences na dinidiscuss ko or pina-explain ko kanina. So, sabi dito, the readers should take note that the permanent differences do not have corresponding tax expense since they do not have tax consequences. So, diba, kapag permanent differences ang pinag-uusapan, never nitong maapektuhan yung POV ng taxation. So, hindi siya magkakaroon ng corresponding tax expense dahil wala nga siyang tax consequences in the future. So, ito yung presentation para matukoy natin kung ano ba yung total tax expense para mas malinawan lang tayo. So, ayan, makikita nyo na yung mga items na nilalas sa ating net income ay yun nga ang tinatawag nating total tax expense. So, nilalas natin ang total tax expense in order for us to determine kung ano ba yung talagang naging income after mabawasan yung tax ng isang company.
Current income tax. Current tax is simply computed as the amount of taxable income times the corresponding tax rate. However, for final withholding taxes, caution should be given if the amount of income is already net of final tax. Dito, kung ano yung tax rate ng current year, yun yung gagamitin mo to compute for the taxable income. Let's say for 2020, ang rate ay 30%. Then, nung nag-2021, naging 25% na lang. Tapos, ang i-compute mo na taxable year ay 2021. E di yung rate ng 2021 yung gagamitin mo, which is 25%. So, here are the pro forma entries. First, to recognize for current income tax expense debit, then credit income tax liability. Then, to record for the payment of current income tax, debit income tax liability, and credit cash. Illustration 2, ganito lang yung ginawa na process. First, reconcile the amount of accounting income to taxable income tulad ng diniscuss kanina. Accounting income before tax is 4 million. Add the non-tax deductible expenses for 150,000, then less non-taxable gain on life insurance na 1 million. Then the income subject to income tax is 3,450,000, less income subject to final tax is 160,000. The taxable income subject to regular income tax is 3,290,000. Next, apply the corresponding tax rates to the corresponding amount of income to compute for the amount of current income tax. First, yung sa final tax expense na 160,000, dinivide siya sa 80% kasi yung 160,000 dyan is already the net of 20% tax na agad. Kaya need natin makuha yung 100%, which is the 200,000. Then, saka natin, imumultiply siya sa 20% na final tax. Makukuha natin yung 40,000 na amount. Then, for the regular income tax expense naman na 3,290,000, imumultiply natin siya sa 25%, kaya ang total current income tax expense natin ay 862,500. So last is compute for the income tax payable in the following manner. First, regular income tax, yung na-compute natin sa pangalawa kanina na 822,500. Then, ilalas lang natin yung nasabi kanina sa problem na already paid yung regular income tax na 300,000. Kaya ang income tax payable na natitira sa entity is 522,500.
So, pag-usapan naman natin ngayon ang temporary differences. So, kanina nabanggit ko na yung temporary difference is yung mga difference between sa accounting income and taxable income na maaaring magkaroon ng adjustments o pagkakatugma in the future. So, itong temporary differences na to is nahahati sa dalawa, ang taxable temporary differences at deductible temporary differences. So, ang una is yung taxable temporary differences. This will result in taxable amounts in determining taxable profit or tax loss of future periods when the carrying amount of the asset or liability is recovered or settled. So, kapag taxable differences, ito yung mga possibilities ng pagtaas ng tax na ina-apply doon sa isang asset in the near future. So, for example, 2 years ago, may binili kang property na worth 100,000. Then, yung current value niya ngayon is 150,000 na. So, ang nirecord mo sa iyong financial statement as gain is 50,000. Pero sa POV ng taxation, ang current value ng property na yun is 120,000 lang. So, mas mababa yung value niya sa taxation. So, yung differences between 150,000 and 120,000, ito yung binibase na tataksan sa future. So, yung 20K na difference, yung 50,000 from from 150,000 minus 100,000, and yung 100 120,000 or yung minus 150,000 or yung 30,000 na nakuha natin kanina, yun yung tinatawag na taxable temporary difference. So next is yung deductible temporary differences. This will result in deductible amounts in determining taxable profit or tax loss of future periods when the carrying amount of the asset or liability is recovered or settled. Next is yung yung deductible temporary differences. Ito naman yung mga possibilities na mabawasan yung buwis na babayaran mo sa isang asset na nagre-result siya as deferred tax asset. So, halimbawa, may binili kang equipment worth 50,000. Ayon sa inyong accounting records, ang re-recognize mo na depreciation per year is 10,000. Pero sa POV ng taxation, ang allowable depreciation lang for that equipment is 8,000 lang. So, yung differences ng 10,000 na ni-record mo sa accounting income and yung 8,000 na tinutukoy doon sa taxation, yun yung tinatawag natin deductible temporary differences. So in general, kapag yung asset mo from taxable temporary differences at taxable temporary differences ay nangangahulugan lang na mataas lang yung babayaran mong buwis in the future. So, mas mababa yung magiging asset mo, sa future. Whereas, pag deductible temporary differences, mas mababa yung binabawasan mong or binabawas mong tax. So, mas mataas yung magiging asset mo in the near future. So, ito yung table na nagpapakita ng effects ng taxable at deductible temporary differences. So, kapag taxable, magkakaroon siya ng deferred tax liability and deferred tax expense dahil mataas yung buwis na binayaran mo sa future. Then, yung deductible temporary differences naman is nagre-result ng deferred tax asset and deferred tax benefit or benefit income. Dahil mas mababa yung tax na binayaran mo sa future.
Determining the amount of deferred taxes. So, deferred taxes. When computing for the amount of deferred taxes, an entity can either use the income statement approach or the balance sheet approach. Both approaches will result to the same deferred amounts. So, deferred taxes is equals to amount of temporary difference times relevant tax rate. So, deferred means madadali yung pag-settle ng tax. Nagkakaroon nito dahil sa temporary differences. Kunwari, na-record mo na siya ngayon. Pero sabi ng BIR, future pa yun pwedeng i-recognize kaya magkakaroon ka ng future tax consequence. Future taxable amount kapag deferred tax liability and future deductible amounts naman kapag deferred tax asset. The tax rate is not necessarily the currently enacted rate, but should be the tax rate that the estimated to be applied during the period that the deferred taxes are expected to reverse, provided the new tax rate is substantially enacted as of the reporting date. Yung pag-compute ng deferred tax ay depende sa tax rate during the year na isa-settle mo yung liability at kung kailan na-realize yung asset. So, for example, 30% tax rate ang applicable to the year 2020. 25% rate naman yung applicable and effective starting taxable year 2021. So, ang tanong is, what tax rate shall be used to measure the current and deferred taxes on December 31, 2020? Yung sagot dyan is yung for current tax, 30%. Kasi ngayon yung tax rate na applicable for 2020. And then for deferred tax naman is 25% na since hindi pa naman siya mare-recognize or mare-record during 2020. Ang gagamitin na is yung tax rate ng 2021. Deferred tax assets and deferred tax liabilities shall never be discounted. So, gross amount lagi yung dapat i-record pagdating sa kanila. Kapag naman greater than yung deferred tax liability compared sa deferred tax asset, it's said to be the net deferred tax liability. Kapag naman kabaliktaran, deferred tax liability is less than deferred tax asset, it's said to be net deferred tax asset. Both deferred tax asset and deferred tax liability are always considered non-current. Hindi sila na re-reclassify into current since palaging 12 months or beyond 12 months sila bago nasisettle. Yung tax mo for 2020 kunwari is 2021 mo pa talaga nababayaran. Kaya hindi sila pwede ma-classify as current. Income statement approach. Applicable only if the amounts of taxable income and accounting income are provided. As such, the following procedures are followed. First, an entity shall compare the following amounts: accounting income subject to regular income tax and taxable income per the current period. First, accounting income subject to regular income tax is greater than taxable income per the current period, resulting deferred tax, net deferred tax expense. For example, recognizing revenue under accrual basis. Pero sabi ni tax, i-recognize mo lang yung revenue kapag na-receive mo na. So, ilalas mo yon sa accounting income para magkaroon ka ng deferred tax liability. Since future pa naman dapat yun matatax. Next, accounting income subject to regular income tax is less than taxable income per the current period, resulting deferred tax, net deferred tax benefit. So, sabi kasi lagi raw nasusunod ang BIR, kaya laging sinusunod ang taxable income. Kapag mas malaki yung taxable income, need mo i-adjust yung accounting income by increasing it since deductible pa naman siya in the future. So, for deferred tax expense, tulad nga ng example kanina, since future pa naman matatax, edi madadagdagan yung future taxable amount or the net deferred tax liability, then deduction naman kapag deferred tax asset. For net deferred tax benefit naman, since nadagdagan nga yung future deductible amounts, mababawasan o bababa yung net deferred tax liability, then madadagdagan naman yung net deferred tax asset since deductible amounts nga yung madadagdag. For the pro forma journal entries, sundan lang natin yung nandyan sa screen nyo. If there is a net deferred tax expense, debit deferred tax expense net, and then credit deferred tax liability net, or deferred tax expense, debit, and then credit deferred tax asset. If there is a net deferred tax benefit naman, ida-debit yung deferred tax liability net and then credit deferred tax benefit na net. Or deferred tax asset debit and then credit deferred tax benefit net.
Let's open our book on page 454 para mabasa natin ang illustration 3. At the beginning of 2023, Sanchez Company reported a net DTL of 400,000 pesos. During 2023, accounting income of 7 million pesos were reported. In addition, the following differences between the accounting rules and tax rules were noted. Letter A, income of 750,000 pesos is non-taxable. Letter B, operating expenses of 450,000 are not deductible for tax purposes. Letter C, recorded depreciation expense for the building amounted to 1,800,000 pesos. However, related tax depreciation should be 1,500,000. Letter D, accounting depreciation for the equipment amounted to 900,000 pesos. However, the related tax depreciation should be 1,150,000 pesos. Letter E, estimated warranty expense amounted to 600,000 pesos. Actual warranty cost amounted to 400,000 pesos. Warranty costs are tax deductible when actually paid. And lastly, letter F, income of 1 million were accrued in accounting records that will be taxable only when actually received. Letter G, advances from customers amounting to 350,000 pesos were recorded as liability but taxable upon receipt. And lastly, there were no item of income that are subject to final tax or capital gain tax. Relevant regular income tax rate is 25%. So, from this, anong makakuha natin? Okay, required. From this information, determine the following amounts. Letter A, current income tax expense. Letter B, net deferred tax expense or benefit. Letter C, ending net DTL or DTA. Letter D, breakdown of net deferred tax expense or benefit. And lastly, letter E, presentation of total tax expense. First, kunin muna natin ang unang hinahanap, ang current income tax expense. Okay, so paano natin kukunin yun? Reconcile the amount of accounting income to taxable income. So, kukunin muna natin yung taxable income. Okay, so given naman ang accounting income before tax, which is yung 7 billion pesos kanina. And then, i-add muna natin ang mga non-tax deductible expenses, which is a permanent difference na naturo na kanina si. Okay, so i-add natin ang 450,000. Okay, and then ileless naman natin ang non-taxable income permanent difference. Okay, which is 750,000. So, after natin i-add at i-minus yun sa 7 million pesos, magka-come up tayo sa income subject to regular income tax, which is 6,700,000 pesos. Okay, so yung mga temporary differences naman ang need nating i-add or i-less doon sa ating value. Okay, so i-add natin ang excess accounting depreciation ng building dahil ang accounting depreciation niya is 1.8 while yung tax depreciation niya is 1.5. So yung excess nun is i-add natin dun sa value which is 300,000 pesos. So yung excess accounting warranty expense din naman natin is i-add din natin doon sa value which is 600k minus 400k. And then taxable advances from customers kasi hindi pa naman natin siya like yung 350,000 is taxable na siya even though na advances pa rin siya sa customer kasi taxable siya upon receipt. Okay? And then ileless naman natin yung excess tax depreciation ng equipment dahil ang meron siyang tax na 1,150,000. And then meron siyang ang accounting depreciation niya is 900k. So meron tayong sobrang tax depreciation na 250k. And then ililist din natin na accrued income not yet taxable in 2023 which is 1 million. So ito yung advances ng customers pero hindi siya taxable upon receipt. Okay? So, after natin i-add and i-less yun, magka-come up tayo sa value na taxable income for 2023 which is 6,300,000. Okay, from that, gagamitin natin ang 6,300,000 and then yung tax rate na effective sa year na 2023 which is yung 25%. Okay, so 6,300,000 multiplied by 25% is 1,575,000. So, nakuha na natin ang current income tax. Okay, ang second step naman is kunin natin if net deferred tax expense ba siya or net deferred tax benefit. Okay, since the amount of accounting income subject to income tax is 6,700,000 is higher than the computed taxable income which is 6,300,000, their net difference of 400,000 pesos is a taxable temporary difference. Okay, this will result to net deferred tax expense kasi mas mataas yung accounting income subject natin compared doon sa taxable income. So yung difference nilang dalawa which is 400,000 is i-multiply doon sa tax rate, doon sa effective tax rate which is 25%. So 400,000 pesos multiplied by 25% which is mag-i-equal sa 100,000 pesos. So, paano natin i-journal entry to? This can be recorded as follows. Debit deferred tax expense net which is 100,000 and then credit deferred tax liability net na may value din na 100,000 pesos. After recording this entry, ending balance of net DTL is 500,000 pesos. Kasi meron tayong 400,000 noong beginning natin. So, i-add lang natin yung bagong deferred tax expense net na which is 100,000 pesos. After natin makuha ang net deferred tax expense, ang kukunin naman natin ngayon is yung ending balance ng deferred tax expense at deferred tax benefit. Okay. So the source breakdown of 100,000 net deferred tax expense is as follows. Okay. So deferred tax expense computation. Excess tax depreciation of 1,150,000 pesos minus 900,000, which is 250,000, is i-add natin doon sa accrued income not yet taxable in 2023, which is 1 million. Okay? So, magkakaroon tayo ng taxable temporary difference of 1,250,000, which is multiply natin doon sa regular income tax rate na effective ngayon 2023, which is yung 25%, and then makakuha natin ang deferred tax expense increase in DTL is which is 312,500 pesos. Okay? So deferred tax benefit computation. So dito naman natin kukunin yung value ng mga inad natin dun sa temporary difference. Kasi kanina yung mga niles natin, yun. The deferred tax expense yun. Okay. So excess accounting depreciation building, which is 300,000 pesos. I-add din natin dito yung excess accounting warranty expense, which is yung difference between na 600k and 400k na 200,000 pesos. And then i-add din natin dito yung taxable advances from customers, which is 350,000 pesos, sorry. And then magkakaroon tayo ng total na deductible temporary difference of 850,000 pesos. So i-multiply din natin to sa income tax rate na effective this 2023, which is 25%, and then makakuha natin ang deferred tax benefit increase in DTA, which is 212,500 pesos. So after that, i-add lang natin sila tawag doon, i-minus lang natin yung tax expense doon, minus pa natin yung tax benefit sa tax expense. So, ganito mangyayari. The net deferred tax expense of 100,000 can now be computed as follows. Okay? Deferred tax expense, 312,500 pesos. I-release natin yung deferred tax benefit, which is 212,500. So, magkakaroon tayo ng total na net deferred tax expense of 100,000 pesos, which is mag-i-increase ng DTL or ng deferred tax liability.
Balance sheet approach. This approach is followed in PAS 12. This is also applicable if the tax base and the carrying amounts of the assets and liabilities are determinable. The tax base of an asset or liability is compared with the corresponding carrying amount. Since balance sheet nga yung pinag-uusapan na approach, ang makikita nyo rito ay carrying amount and tax base of the usual items of the statement of financial position, which is the asset and liabilities. Need lang natin tandaan yung mga items na yan para masabi na balance sheet approach ang ina-apply. Tax base of an asset. The amount that will be deductible for the tax purpose against any taxable economic benefits that will flow to an entity when it recovers the carrying amount of the asset. If those economic benefits will not be taxable, the tax base of the asset is equal to its carrying amount. So the tax base is whatever the losses is subject to the tax. In simple definition, tax base of an asset is just the future deductions. These principles can be exemplified as follows. First, a building has a cost of 10 million and a carrying amount of 7 million. For tax purposes, the cumulative amount of depreciation deducted from income totaled 4 million pesos. The tax base of the building is 6 million pesos. So dito, nag-depreciate yung building, kaya ang tax base niya na ay naging 6 million, nabawasan ng 4 million yung 10 million. Second, a land has an original cost of 8 million. However, during the year, impairment loss of 2 million was recorded. In taxation, the amount of loss is deductible only when realized. The tax base of the land is 8 million. 8 million pa rin yung tax base since sa taxation, nagdededuct lang talaga ng loss kapag na-incur na mismo. Third, accrued interest receivable has a carrying amount of 500,000. This amount is taxable only upon the receipt. The tax base of this asset is 0. So dito, hindi pa naman totally na re-receive ng company yung interest since receivable pa nga siya kaya wala pang na-recognize na tax base. Fourth, a note receivable has a carrying amount of 800,000. The receipt of the repayment from debtor is not taxable. The tax base of the note receivable is still 800,000. Hindi taxable yung income kaya carrying amount yung ginamit na tax base.
Pag-usapan naman natin ngayon ang tax base of a liability. So, the tax base of a liability is its carrying amount less any amount that will be deductible for tax purposes with respect to that liability in the future periods. In the case of revenue received in advance, the tax base of the resulting liability is its carrying amount less any amount of the revenue that will not be taxable in future periods. So, ang tax base of liability is the carrying amount less allowable deductions for tax purposes in the future. For example, if may income ka na 450,000 per month, and yung taxable rate for this is 15%, for example lang, kunwari lang then yung equivalent ng 15% at ng 450,000 is ililess mo sa 450,000, then yung sagot is yung tax base liability. Kumbaga, ito yung amount after mong iless lahat ng mga deductions na allowed sa iyong income. Pero, kapag revenue in advance naman ang pinag-uusapan, sa POV ng accounting, tinuturing mo na itong liability. Pero sa POV ng taxation, may certain portion lang dito ang inire-recognize as taxable income. So, for example, may na-receive kang 10,000 or advances na 10,000 sa iyong client. So, sa financial statement, nire-recognize mo na siya agad as your liability. But sa POV ng taxation, 9,000 lang yung taxable. So, yung differences ng taxable income doon sa revenue na natanggap mo, ayun yung tax base of a liability mo. So, ito yung mga situations para masabi natin kung ano yung mga tax base liability ng bawat scenario. So, yung una, interest payable has carrying amount of 600,000. This can only be deducted for taxation purposes only when actually paid. So, the tax base of the liability is 0. Since hindi pa siya nababayaran, so yung tax base of a liability is 0. So, take note na ma-apply natin ng taxation once na magkaroon na tayo ng actual na pagbabayad or may nilalabas na tayong cash. So, next is yung estimated warranty expense is 700,000 while the actual warranty cost amounted to 300,000. For tax purposes, warranty costs are deductible when actually paid. The tax base of the liability is 0. So, since hindi pa nga siya nababayaran, wala kang paglalabas ng cash dito, hindi pa rin siya i-recognize sa taxation. So, yung tax base of the liability is 0 pa rin. So, next is, accrued utilities has a carrying amount of 700,000. This has already been deducted for tax purposes. So, the tax liability is 700,000. Since nabanggit na rito na naibawas na yung mga allowable deductions doon sa 700,000 na binayaran natin, so ito na yung ating tax liability. Diba nga ang sabi ko kanina, kapag nagkaroon na ng deductions dun sa carrying amount, then yung deductions na yon from that difference sa carrying amount at sa deductions, yun na yung tax base of a liability natin. So, lastly, Advances from customers, a liability accounts, has a carrying amount of 1.2 million. The receipt of these amounts is already taxable. The tax base of the liability is
application of balance sheet approach. When applying this approach, an entity may use the following step. First, determine and compare the carrying amounts and tax bases of the assets and liabilities. The results of this comparison are summarized as follows. First, for assets, if the carrying amount is greater than the tax base, resulting deferred tax amount is deferred tax liability. Next, if the carrying amount is less than tax base, the resulting deferred tax amount is deferred tax asset. So, para dito sa asset, kapag mas malaki yung carrying amount, magiging taxable siya, kaya magre-result yun sa deferred tax liability, since padadagdagan yung obligation na need i-settle ng isang tao. Kabaligtaran naman kapag mas malaki yung tax base. Kasi ang mangyayari kapag mas malaki yung tax base, magiging deductible kaya magkakaroon ng deferred tax asset. And then for liabilities, carrying amount is greater than tax base, it will result to deferred tax asset. Carrying amount is less than tax base, it will result to deferred tax liability. So, kabaligtaran lang siya nung nangyayari kapag asset. Next, compare the determined ending deferred tax liability or asset with the corresponding beginning balances of deferred tax liability or asset. This change in the balances have the following effects in deferred tax expense or deferred tax benefit or income. First, kapag tumaas ang deferred tax liability, mag-result ito sa deferred tax expense. Siyempre, kapag tumaas yung deferred tax liability, tataas yung need mong isettle na liability kaya magkakaroon ka ng deferred tax expense. Kabaligtaran naman kapag bumaba yung liability, magiging deferred tax benefit yon. Then, kapag tumaas naman yung deferred tax asset mo, tataas din yung deductible mo kaya magkakaroon ka ng deferred tax benefit. Kapag nabawasan naman yung deductible mo, may chance na tumaas naman yung babayaran mong tax kaya magre-result yun sa deferred tax expense.
Hello guys, I'm Nate Matthew and nagbabalik ako para i-report sa inyo ang illustration 4 para mas maintindihan natin ang balance sheet approach. So, as of December 31, 2023, the carrying amounts of Taurus companies' assets and liability equal their corresponding tax bases except for the following. Okay? FTPL investments or debt securities carrying amounts of 1,600,000 pesos with a tax base of 1,100,000 pesos. Okay? Equipment with carrying amount of 2 million pesos and a tax base of 2,400,000 pesos. Building with a carrying amount of 5 million pesos with a tax base of 4 million pesos. Advances from customers with a carrying amount of 800,000 pesos with a tax base of 600,000 pesos. Estimated warranty liability with a carrying amount of 250,000 pesos and a tax base of 400,000 pesos. Relevant tax rate is 25%. Beginning balance of deferred tax liability and asset amounted to 300,000 and 90,000 pesos respectively, and net liability of 210,000 pesos. What required? Determine the total amounts of deferred tax liability and deferred tax asset as of December 31, 2023 and the deferred tax expense and deferred tax benefit for the year. So, paano natin sisimulan sagutan ang balance sheet approach? Okay, number 1, first determine the difference between the carrying amount and tax base of each asset and liability. Okay, so kunin muna natin yung FPTPL investment debt securities with a carrying amount of 1,600,000 and tax base of 1,100,000. Ang difference nila is 500,000. Okay, equipment, meron siyang carrying amount na 2 million at tax rate na 2.4 million. So, meron siyang difference na 400,000 which is negative 400,000 since mas malaki, since pinaminus natin ang carrying amount minus tax base. So, if mas malaki ang tax base, magkakaroon ka ng negative na difference. Okay? And then, building with a carrying amount of 5 million and tax base of 400,000 of 4 million pesos, sorry. So, meron kang difference na 1 million. advances from customer with a carrying amount of 800,000 and a tax base of 600,000. So meron kang like difference na 200,000 pesos. And then estimated warranty liability of 250,000 is meron tax base na 400,000. So meron kang difference na negative 150,000 since mas malaki nga ang tax base compared sa carrying amount. So based on the computations above, if the amounts of difference is positive, carrying amount is, katulad ng sinasabi ko, is greater than the tax base. And if the amount of difference is negative, the carrying amount is lower or lesser, is less than the tax base. So, after natin malaman ang mga differences, ang next naman natin gagawin is to determine which of the difference will give rise to taxable temporary difference, deferred tax liability, or deductible temporary difference, deferred tax asset. In absolute amounts, okay, ito titignan na natin. Ang first sa asset, FVTPL Investments Debt Securities, na meron difference na 500,000 pesos, is mag-aaray siya sa deferred tax liability. Okay, tandaan natin na kapag positive yung nasa asset, pag positive yung difference, ilalagay natin siya sa deferred tax liability. Pero kapag negative ang difference ng asset, is ilalagay natin siya sa deferred tax asset. Okay, so katulad dito sa equipment, meron siyang negative 400,000 pero ilalagay natin siya sa deferred tax asset. Yung building, meron siyang difference na positive 1 million pesos. So, ilalagay natin siya sa deferred tax liability. Okay. Habang sa liabilities naman, is kabaliktaran yon. So, katulad dito, meron positive na advances from customers. Okay. Pero, ilalagay natin ang positive difference na yun sa deferred tax asset. Pero, ang estimated warranty liability na 150,000 pesos is negative siya. So, ilalagay natin siya sa deferred tax liability. So, meron tayong total sa deferred tax liability of 1,650,000 pesos and then total ng deferred tax asset which is 600,000 pesos. So, after natin makuha yon, pwede na natin makuha ang amounts of deferred tax liability and asset. Okay, so taxable temporary differences of 1,650,000 pesos or yung tax liability natin kanina is multiply lang natin sa income tax rate of 25% pesos. No, it's not pesos. It's 25%. Sorry. So, deferred tax liability as per 12/31/23 or December 31, 2023 is 412,500 pesos. So, siya yung 25% ng 1,650,000. Okay? And then, ileles natin yung deferred tax liability noong January 1, 2023 or yung beginning which is 300,000 pesos. So, mag-arab tayo sa deferred tax expense of 2023 na 122,500 pesos. Okay? And then, after that, pwede rin natin kukunin ang deferred tax benefit na ending. So, paano yun? By deductible temporary differences na 600,000 pesos. Yun na compute natin kanina. And then, i-multiply natin sa effective tax rate na 25%. After that, makuha natin ang deferred tax asset as per 12/31/23 or yung ending balance which is 150,000 pesos. Okay, so i-release naman natin doon ang deferred tax asset which nung beginning balance which is 90,000 pesos. So, mag-arab tayo sa deferred tax benefit of 2023 na merong value na 60,000 pesos. These changes in deferred taxes are recorded as follows. Debit deferred tax expense of 112,500 and then credit deferred tax liability of 112,500. Deferred tax asset which is a debit of 60,000 pesos and then credit deferred tax benefit of 60,000 pesos. These deferred tax amounts can also be presented in the following net basis. Letter A, net deferred tax liability of 262,500 pesos or the difference between 412,500 and 150,000 pesos as of December 31, 2023. And letter B, net deferred expenses of 52,500 pesos, or the difference between the 112,500 and 60,000 pesos for the year 2023. This can also be computed as the amount of increase in net deferred tax liability, or the difference of 262,500 pesos and 210,000 pesos. Comparison of income statement and balance sheet methods. In an income statement approach, the amount of net deferred tax expense or benefit is determined first. This amount is either added or deducted from the amount of net deferred tax liabilities or assets at the beginning of the period to determine the ending balance of net deferred tax liabilities or assets. So dito sa income statement approach, mas inuuna natin alamin ang net deferred tax expense or benefit para makuha natin ang ending balances nito. While on the balance sheet approach, the ending balance of net deferred tax liabilities or assets are determined first. This ending balance are compared with the corresponding beginning balances to determine the amounts of net deferred tax expense benefits during the current year. So dito naman sa balance sheet approach, yun natin kunin ang ending balance and then i-compare natin siya doon sa beginning balance para makuha natin yung net nito. Okay? So, pero kahit naman magkaiba ang approach ng dalawang ito, similar pa rin nakakuha nating value ng net deferred tax expense or benefit during the current year. So, same pa rin sila ng value, and at the same time, ang pinagkaiba lang talaga nila most likely is yung income statement approach is mas madali kunin ang current income tax compared sa balance sheet approach. Pero like, yung balance sheet approach is mas maganda siya sa tingin ng entity dahil binibigyan nito ang entity ng kakayahan to know the gross amounts of deferred tax liabilities and assets rather than the net amounts under the income statement approach. So, para mas maintindihan natin ang pagkakaiba ng dalawang ito, tignan natin ang illustration number 5. Illustration number 5. So, tignan natin tong illustration na to para mas maintindihan natin ang differences ng dalawang approach. So, Revusoli Company reported accounting income before tax for 2023 amounting to 8,500,000 pesos. The following year were the differences noted between the accounting rules and the tax rules. A. Income of 1,100,000 is non-taxable. Operating expenses of 650 are not tax deduct. Letter B. Depreciation expense recorded for machinery amounted to 950,000 pesos. However, the tax depreciation should be 600,000 pesos. Letter C. Depreciation expense recorded for vehicles amounted to 1,200,000 pesos. However, tax depreciation should be 1,400,000 pesos. Letter D. Estimated warranty expense of 750,000 was recorded and 500,000 was paid for the warranty claims. Warranty costs are tax deductible only when actually paid. Letter E. Research costs of 2 million pesos were expensed during 2023. However, the tax purposes, these costs are tax deductible in equal amounts for 5 years including the current year. So, this is the table natin sa page 461 sa book natin. So, sa beginning of the year, machinery net have a carrying amount of 4,550,000. Tapos meron siyang tax base na 5,200,000. Okay? And then at the end of the year, meron na carrying amount itong 3,600,000 and a tax base of 4,600,000. Vehicles net in the beginning of the year, meron siya carrying amount na 3,500,000 pesos and a tax base of 3,100,000 pesos. At the end of the year, meron siyang carrying amount of 2,300,000 pesos and a tax base of 1,700,000 pesos. The warranty liability at beginning of the year, meron siyang carrying amount of 1 million pesos at wala siyang tax base. And in the end of the year, meron siyang carrying amount of 2,250,000 and wala siyang tax base. Research cost in the beginning of the year, wala. Okay. And the end of the year, meron siyang tax base na 1,600,000. Okay. For tax rules purposes, gawin natin like deferred tax asset, si research cost. So, okay. So, the given is in page 461. So, sa PPT natin, gatong sinasabi dito, like, machinery net has a carrying amount of 4,550,000 pesos and a tax base of 5,200,000 pesos in the beginning of the year. In the end of the year naman, meron siya carrying amount of 3,600,000 pesos and a tax base of 4,600,000 pesos. Okay? The vehicles, in the beginning of the year, meron siyang carrying amount of 3,500,000 pesos and a tax base of 3,100,000 pesos. And in the end of the year, meron siyang carrying amount of 2,300,000 pesos and a tax base of 1,700,000 pesos. Warranty liability in the beginning of the year has a carrying amount of 1 million pesos and in the end of the year, meron siyang carrying amount na 1,250,000 pesos. Research cost, in the end of the year, meron siyang cost na tax base na 1,600,000 pesos. Okay? In the end of the year, machinery net has a carrying amount of 450,000 pesos. Tapos meron siyang tax, pero ang sabi dito is ang kanyang tax depreciation is 950,000 lang. So, add or deduct, which is 10 yan. And the tax base of 5,200,000 pesos. Tapos, in the end of the year, vehicles net, meron siyang carrying amount na 3,500,000 pesos. Add or deduct, 1,200,000 pesos. So, and then tax base of 3 million or 100 and 3 million, and 3,100,000 pesos. And then deduct of 1,400,000 pesos. While the warranty liability has a carrying amount of 1 million pesos. Add of 750,000 pesos. Yun lang naman. And then, bawasan natin ng 500,000 pesos dahil sa given kanina. Okay? And then, the research cost, paano natin nakuha yung 1,600,000 pesos is, kasi babayaran natin siya ng ng 5 years. Right? Babayaran natin siya for 5 years. So, for tax purposes, ganito ang kanyang formula. 2 million pesos minus 2 million divided by 5. Okay? Para makuha natin yung 1/6. Kasi, ang research cost for tax purposes, like, iti-treat natin siya as tax benefit. Okay? From the given information, determine the following amount using both the income statement approach and balance sheet approach. Letter A, net deferred tax liability or asset as per 1/1/23. B, current income tax expense for 2023. Letter C, net deferred tax expense or benefit for 2023. And letter D, net deferred tax liability or asset for 12/31/2023. So, kunin muna natin yung mga differences or yung mga bagay na magagamit natin sa both approach before tayo mag-proceed sa kanila. So, net deferred tax liability or asset in 1/1/23 or yung unang requirements natin, step 1, para ma-compute natin ang difference between the carrying amount and the tax base, need lang natin silang i-minus kasi difference na naman hinahanap natin, right? So, machinery has a carrying amount of 4,550,000 pesos and a tax base of 5,200,000 pesos. Since mas mataas ang tax base, so magkakaroon tayo ng negative na difference. So, anong difference nila is, it is 650,000 pesos. Vehicles has a carrying amount of 3,500,000 pesos and a tax base of 3,100,000 pesos. So, since mas malaki ang carrying amount, magkakaroon tayo ng positive na difference which is 400,000 pesos. Warranty liability has a carrying amount of 1 million pesos and wala siyang tax base. So, idadali lang natin siyang lahat sa difference. So, meron tayong difference na positive 1 million pesos. And then, for step 2, classify each difference if they will result to deferred tax liability or asset in absolute amounts. Okay? So, ang titingnan natin is kapag positive ang difference, kunya di ba asset to? Okay? Kapag asset, kapag positive ang difference sa deferred tax liabilities natin siya ilalagay, while kapag negative naman, ilalagay natin siya sa deferred tax asset. Okay? So, machinery has a negative difference, negative 650,000. So, ilalagay natin siya sa deferred tax asset. While the vehicles has a positive difference, so sa DTL natin siya ilalagay. And the warranty liability has a positive. Okay? So, if positive naman ang difference ng liability, ilalagay natin siya sa DTA. While kapag negative ang difference niya, sa DTL natin siya ilalagay. So, ngayon, dahil nalagay na natin yung tatlong kailangan o yung tatlong temporary differences, kukunin na natin yung nila, total nila. So, sa DTL, meron tayong total of 400,000 pesos since yung vehicle lang na may nalagay natin doon. While the DTA, ang total natin doon is 1,650,000 pesos. Okay? Since pinag-add lang natin 650 ng machinery and the 1 million of warranty liability. So, after natin kunin yung mga total nila, i-multiply natin sila sa regular income tax rate. So, 400,000 multiplied by 25%, makakuha tayo ng 100,000. Okay? While in the 25% of naman ng 1,650,000 ng DTA is 412,500 pesos. Okay? So, meron tayong DTI and DTA respectively na 100,000 pesos and 412,500 pesos. At the beginning of 2023, there is a net deferred tax asset of 312,500 pesos since pagmaminusin lang natin itong dalawang to. Okay? So, 412,500 minus 100,000. So, nakuha natin ang net deferred tax asset for the beginning of 2023 which is 312,500 pesos. So, now, let's try na natin gamitin ang income statement approach. Okay, step 1, reconcile the amount of accounting income to the amount of taxable income. Okay, so accounting income before tax is 8,500,000 pesos. Add non-tax deductible expenses of 850,000 pesos. And then, nililess naman natin ang non-taxable income na 1,100,000 pesos. So, after that, meron na tayong value na 8,250,000. So, i-add sa kalis na natin ang temporary differences. So, add muna natin ang ang excess accounting depreciation ng machinery which is 350,000 pesos. I-add naman natin ang excess warranty expense na 250,000 pesos. And then, i-add din natin ang research costs that are tax deductible in the future which is 1,600,000 pesos. Okay, pa natin kinuha yun? Like, 2 million minus 2 million over 5 years. Okay? And then, ililist naman natin ang excess tax depreciation ng vehicle which is 200,000 pesos. So, in total, 8,250,000 plus 350,000 plus 250,000 plus 1,600,000 minus 200,000 is dadalhin tayo sa value na 10,250,000. Yun ang taxable income for 2023. Okay? So, after natin makuha ang taxable income for 2023, multiply lang natin siya sa regular income tax rate na 25% para makuha natin ang 2,562,500. Okay? So, what is the effect of research costs in computing for the taxable income for the year 2023 can also be stated as follows. Okay? Letter A, the whole amount of 2 million pesos is added back to the accounting income. Letter B, annual amount of 400,000 pesos is deducted from accounting income. Both of this amount will result to net addition of 1,600,000 pesos in determining the 2023 taxable income. Okay? So, like, i-amortize natin yung 2 million na yun kasi gagamitin natin for 5 years ang cost na yun na na-incur natin noong 2023. Okay? So, since di pa naman natin i-amortize natin siya, guys. So, for step 2, the amount of income subject to regular income tax is lower than the amount of taxable income for the year. Hence, the difference of 2 million pesos will result to a net deferred tax benefit and corresponding increase in deferred tax asset. So, mas mataas ang ang ating ang ating taxable income compared sa ating accounting income. So, anong gagawin natin? Nagkaroon tayo ng difference na tax benefit or tax asset deferred. Okay? So, consequently, the amount of net deferred tax benefit for 2023 is 500,000 pesos. This shall be recorded as follows. Okay, paano natin ako yung 500,000? Simple. Like 2 million pesos is multiply natin sa regular income tax rate. So, makakuha natin yung 500,000. So, yung 500,000 is i-journal na entry natin siya like debit deferred tax asset net 500,000 pesos and a deferred tax benefit of 500,000 pesos. Credit naman yon. After recording this entry, the amount of net deferred tax asset as of 12/31/23 is 812,500. Since sa beginning, meron tayong total na 312,500 plus the 500,000 deferred tax benefit ngayong year. Okay. Okay. Sorry. Step 3. The company's income statement will show the following portion. Okay? Net income before tax or the accounting income is 8,500,000. Okay? So, ililess naman natin dito yung current income tax expense na kinumpit natin kanina, which is the 2,562,500. Okay? And then, since meron tayong net deferred tax benefit na 500,000 kanina, i-minus natin to sa current income tax expense. So, magkakaroon tayo ng total tax expense of 2,062,500 pesos. Okay? So, yung ma-minus lang natin ang net income before tax and total expense. So, makakuha natin ang net income after tax, which is 6,437,500. Alternatively, the total tax expense of 2,062,500 can also be computed by multiplying the 8,250,000 income subject to regular income tax by 25% tax rate. Okay? So, yun ang income statement approach. So, next naman is balance sheet approach. So, ano nga ba meron sa balance sheet approach at paano natin siya kinukuha? So, na-discuss na natin yan kanina. So, the step 1 is determine the differences between the carrying amount and the tax basis as of December 31, 2023. So, machinery has a carrying amount of 3,600,000 pesos and a tax base of 4,600,000 pesos. So, kunin natin differences nila, which is negative 1 million pesos since negative siya dahil mas mataas ang tax base over sa carrying amount. Vehicles has a carrying amount of 2,300,000 pesos and a tax base of 1,700,000 pesos. So, meron siyang positive difference na 600,000 pesos. Warranty liability has a carrying amount of 1,250,000 pesos. So, meron siyang like, ang carrying amount lang pala ng warranty liability is 1,250,000 pesos. And a difference of 1,250,000 pesos since wala siyang tax base. And the research cost walang siyang carrying amount and a tax base of 1,600,000 pesos. Pinakita na kanina kung paano kino-compute ang research cost tax base, and also ititreat natin siya as deferred tax asset. So the difference is negative. Step 2 is classify each difference if they will result so deferred tax liability or asset in absolute amounts. Okay? So, machinery asset, meron siyang negative na difference. So, ilalagay natin siya sa DTA. Okay? Vehicles is an asset with a positive difference of 600,000. So, ilalagay natin siya sa DTL. Warranty liability, meron siyang positive na 1,250 or 1,250,000 pesos. So, ilalagay natin siya sa DTA since ang positive ng liability account is ititreat siya sa DTA. And then, the research cost or asset na merong 1,600,000 na negative is ilalagay natin sa DTA also. Okay? And then, kukunin na natin yung total ng DTL at DTA. And then, mumultiply natin siya sa regular income tax rate, which is 25%. So, 600,000 for DTL multiply by 25%, magkakaroon tayo ng 150,000 pesos na net deferred. Meron tayong DTL yon na 150,000 pesos. And sa DTA naman, Like, meron tayong total na 3,850,000 and then multiply nga siya sa 25%. So, para makuha natin yung 962,500. So, at the end of 2023, there is a net deferred tax asset of 812,500. Since imaminus lang natin yung 962,500 sa 150,000 ng DTL. So, ito yung sinasabi kanina na difference. Kanina, di ba, sa dulo pa natin nakita yung 812,500 sa income statement. Pero dito, nakuha natin siya sa step 2 pa lang, sa simula pa lang, nakuha na natin siya. So, ito yung difference nilang dalawa. Ito yung parang most common na difference nila, like yung kitang-kita mong difference nila. So, sa step 3, compute for the amount of change in the deferred tax liability asset to compute for the amounts of deferred tax expense and benefit. So, deferred tax liability as of 12/31/23, meron siyang 150,000 pesos. Nakita natin kanina. So, ito yung sinasabi kanina sa comparison nila na i-compare natin yung ending balance sa beginning balance. So, less deferred tax liability as of 1/1/23, which is 100,000 pesos. Given siya kanina, right? So, may magkakaroon tayo ng total na deferred tax expense increase in DTL in 2023 of 50,000 pesos. Okay? Deferred tax asset as of 12/31/23 is 962,500. Kika-compute lang natin. And then, ililess natin ang beginning balance niya, which is deferred tax asset 1 as of 1/1/23 na 412,500. So, the deferred tax benefit increase in DTA of 2023 is 550,000 pesos. Okay, so nakita na natin to. Ito yung unang kinuha kanina sa income statement approach. Pero nakuha naman natin siya ngayon dito sa step 3 sa patapos na ng balance sheet approach, right? So, same pa rin sila. Same ng value. Kasi kukunin mo ang net nila. So, this can be recorded as follows, right? Deferred tax expense na since meron tayong expense na 50,000, di-debit natin yun. And at deferred tax liability credit of 50,000 pesos to. Deferred tax asset debit na meron 550,000 and a deferred tax benefit of 550,000. Credit naman yon. Netting the amounts of deferred tax expense and benefit will result to net deferred tax benefit of 500,000 for 2023. Same sa income statement approach. This is the same with the amount computed under the income statement approach. So step 4, the implied amount of current income tax expense can also be determined by using the following relationships. Okay, current income tax expense, add net deferred tax expense, less net deferred tax expense, tapos para makuha natin ang total na income tax expense. Okay, so the total income tax expense can be determined by excluding the effects of the permanent differences in computing for the amount of accounting income subject to income tax as follows. Okay, accounting income before tax is 8,500,000, right? So, i-add naman natin ang non-tax deductible expenses, which is 850,000, and less non-taxable income, 1,100,000 pesos. So, magkakaroon tayo ng accounting income subject to income tax of 8,250 para multiply by regular income tax by 25%, makuha natin ang total income tax expense na 2,062,500. Ito yung sinasabi kanina sa income tax na another way paano makuha ang total income tax expense. So, using the total income tax expense of 2,062,500 and net deferred tax benefit of 500,000, yung kinumpit natin kanina yung 500 minus 50, the current income tax expense is the squeeze amount as follows. Okay? Current income tax expense, may squeeze natin siya kapag nag-work back tayo. Okay? So, di ba may given na natin yung total income tax expense, which is yung 2,062,500. Yung kinuha natin from accounting income tax na hindi sinama ang temporary differences, yung mga permanent din ginamit. So, after nun, i-add natin yung 500,000 net deferred tax benefit para makuha natin ang current income tax expense na 2,562,500 pesos. Okay? So, the amount of current income tax expense above is the same as computed when using the direct reconciliation under the income statement approach. In other words, the current income tax expense can still be determined impliedly by using the relationship between the net deferred tax expense or benefit and the total income tax expense or benefit and total income tax expense. Yun lang. Okay, so yun lang yung difference nila. Like, ang difference lang talaga nila is yung the way na approach nila, pero at the same time, dapat mag-yield sila into the same results. Kasi kapag hindi, ibig sabihin, merong mali kang ginawa or meron kang mali ginawa sa pagkuha ng solution sa bawat approach. Yun lang. Thank you!
Recognition of income taxes outside profit or loss. So, di ba, kanina, diniscuss ko yung mga items na nire-recognize agad sa income statement. Dito naman, i-discuss natin yung iba pang items na hindi nire-recognize sa income statement but sa other comprehensive income or equity. So, sabi dito, the following are some temporary differences that are recognized in other comprehensive income. So, revaluation of property, plant and equipment or intangible assets, unrealized gains and losses from financial assets at fair value through other comprehensive income, and remeasurement losses from retirement plan. And pagdating naman sa equity, these are some of the examples. So, withholding taxes from payment of dividends to shareholders, the equity portion of compound financial instrument. So, let's have a sample problem for this topic, no? As of December 31, 2023, Burden Company revalued its land with original cost of 10 million and fair value of 12 million. The revaluation is not taxable at the revaluation date but will be taxable when the land is actually sold. So, ang relevant tax rate niya is 25%. So, para ma-record natin sa ating accounting yung revaluation na nangyari o yung pag-change or pagbabago doon sa ating land, then, i-debit natin yung difference ng original amount ng land doon sa fair value ng land, no? So, 12 million minus 10 million is equal to 2 million. Then, i-credit natin yung revaluation surplus na 1.5 million and credit deferred tax liability na 500,000. Diba ang sabi ko kanina, kapag deferred tax liability, nagkakaroon ng deferred tax liability kapag mas mahal yung binayaran mong buwis kesa doon sa estimated mo na babayaran mo lang ng buwis. So, dito sa problem na to, yung fair value daw ng land ay 12 million na. So, mas mataas yung 12 million dun sa original cost niya na 10 million. So, mas nadagdagan yung gastos niya. So, nagkaroon siya ng tax liability. Next is yung net operating loss carrying over or yung NOLCO. So, may mga pagkakataon kasi na yung isang business ay nakakaranas ng palit-ulit na pagkalugi or loss sa kanilang income. So, ang maliit na kita nila kapag dinagdagan pa yan ng tax is magiging negative na. So, ayon sa rule, ang walang income tax na ina-apply kapag may loss ang isang business or kapag yung taxable income nila is naging loss na. Pero, yung loss amounts na yun is maaaring ibawas sa future taxable income ng isang kumpanya. So, the following accounting procedures shall be considered. An amount of deferred taxes is recognized equal to taxable loss times the regular income tax, assuming all of the taxable loss is recoverable. The amount of recognized deferred tax asset is limited to the portion of NOLCO that is expected to be claimed before it expires. In the Philippines, NOLCO will generally expire 3 years after it was sustained. So, for us to get the deferred tax asset, we will multiply the taxable loss sa corresponding regular income tax rate nito. So, ibig sabihin, hindi lahat ng NOLCO ay maaaring maklaim kaya't ang deferred tax asset is may limit lang sa part ng NOLCO na inaasang magiging effective lang bago ito ma-expire. So, let's have an illustration. Varley Company reported accounting income before tax of 1 million. Proceeds from life insurance amounting to 2 million is not subject to tax, while 350,000 expenses are non-deductible for tax purposes. there were no other temporary differences during the year. Relevant tax rate is 25%. Yan. So, the amount of taxable loss is computed as follows. Accounting income before tax plus non-tax deductible expenses less non-taxable income is equal to taxable loss for 2023. So, yung taxable loss natin for this year is 650,000. So, for us to get the deferred tax asset, imumultiply lang natin yung taxable loss, which is yung 650,000, sa corresponding income tax rate natin, which is yung 25%. So, 650,000 times 25% is equal to 162,500. So, ang journal entry natin para dito ay debit deferred tax asset na 162,500 and credit deferred tax benefit na 162,500. In the income statement of the company, the following portion can be found. Net income before tax or accounting income is equal to 1 million plus deferred tax benefit, which is 162,500. Then the net income after tax is 1,162,500. So, kapag deferred tax benefit ang pinag-uusapan, ina-add siya sa net income before tax, no? Kasi siya ay benefit nga ng company. So, ang magiging net income natin after tax is yung 1,162,500. So, let's have another example, no? During 2023, an entity reported net income before tax of 600,000. Depreciation of 1,250,000 was recorded for the year, but the tax depreciation should be 2,100,000. Relevant tax rate is 25%. Based solely on this information, the amount of taxable loss is computed as follows. So, para makuha natin yung taxable loss, accounting income before tax, ilaless lang natin yung excess na tax depreciation, which is yung 2,100,000 minus 1,250,000. So, meron tayong excess na tax depreciation na 850,000. So, ang ating taxable loss for 2023 is 250,000. So, so yung journal entry natin para dito is debit deferred tax asset na 162,500, credit deferred tax benefit 162,500. So, in addition, deferred tax liability of 212,500 or yung 850,000 times 25%, yung excess tax depreciation, yung multiply natin doon sa regular income tax rate, shall be recognized for the difference in depreciation since the effect of the temporary difference is decreasing the amount of taxable income relative to accounting income. This is recorded as follows. So, kapag meron tayong nire-recognize na deferred tax liability, ang magiging journal entry natin for this is debit deferred tax expense 212,500 and credit deferred tax benefit na 212,500. So, in the income statement of the entity, the following portion can be found. So, yung net income before tax 600,000, ilalas natin yung deferred tax expense na nakuha natin at deferred tax benefit na nakuha natin kanina, which is yung 212,500 less yung 62,500. So, yung total tax expense niya is 150,000. Yung total tax expense, di ba, inilalas natin siya sa net income before tax para makuha natin yung net income after tax. So, 600,000 minus 150,000 is equal to 450,000. So, ang ating net income after tax is 450,000. Pag-usapan naman natin yung change in income taxes. Anong mangyayari sa deferred tax asset at deferred tax liability kapag nagkaroon ng changes sa income taxes? So, yung income tax na or tax rate na ina-apply natin ay hindi naman palaging magkakatulad throughout the existence of an entity. So, nagbabago ito dahil sa mga policies or laws na ibinababa ng government. So, kahit anumang changes ang mangyari, maapektuhan nito palagi yung deferred tax liability at deferred tax asset ng isang company kahit walang pagbabago doon sa temporary differences. So, yung mga changes na ito ay nire-record either in profit or loss, other comprehensive income, or equity, depende doon sa initial na deferred amounts na na-record na. So, in terms of changes sa income tax rate, much better na gamitin natin yung balance sheet approach as it readily accounts for the corresponding changes in the deferred tax amounts, including those coming from changes in tax rates. So, let's have an example problem. At the beginning of 2023, Targun Company reported to 300,000 deferred tax liability and 180,000 deferred tax asset. Net deferred tax liability of 120,000. These are all based on 30% tax rate. At the end of 2023, cumulative taxable temporary differences amounted to 1.5 million and cumulative deductible temporary differences amounted to 950,000. So, requirement. Under each of the following independent scenarios, determine the amount of net deferred tax expense or benefit. Number 1, the enacted tax rate increased to 32%. Number 2 is the enacted tax rate decreased to 25%. So, ang scenario natin kapag ang tax rate ay tumaas ng 32% from 30%, so ang ating step 1 is i-multiply natin ang cumulative taxable temporary differences doon sa ating bagong tax rate. So, cumulative taxable temporary differences, 1.5 million, times enacted new tax rate, which is 32%, magkakaroon tayo ng deferred tax liability na 480,000. So, sabi ko nga, diba, kanina, paulit-ulit ko sinasabi, na kapag deferred tax liability, mas mataas yung buwis na binabayaran mo sa future. So, since mas mataas yung 32% sa 30% na ina-apply nating tax rate, then, magkakaroon tayo ng deferred tax liability para. So, next is, i-multiply naman natin yung new tax rate doon sa cumulative na deductible temporary differences. So, 950,000 times 32% is equal to deferred tax liability na 304,000. For our step 2, ang ilalas naman natin yung nakuha natin deferred tax liability at the end of the period doon sa deferred tax liability na meron tayo at the beginning of the period. So, 480,000 minus 300,000 is equal to 180,000. Then, yung nakuha naman natin deferred tax asset sa end ng ating period is ilalas naman natin doon sa beginning period natin na deferred tax asset, which is yung 304,000 minus 180,000 is equal to 124,000. So, for us to get the net deferred tax expense, ilalas lang natin yung dalawang amounts na nakuha natin sa step 2. So, 180,000 minus 124,000 is equal to 56,000. So, yung portion of net deferred tax expense of 56,000 is related to the increase in net deferred tax liability as of January 1, 2023 na 8,000 na net expense. So, paano natin nakuha yung net expense? So, yung 120,000, i-divide lang natin doon sa ating dating doon sa first na rate na in-apply natin doon. Then, i-multiply lang natin yung increase na tax rate, which is yung 2%. No? So, 120,000 divided by 30% times 2% is equal to 8,000 net expense. So, paano naman kapag nag-decrease yung tax rate? No? So, yung same treatment lang na ginawa natin kanina, ganun lang din yung magiging treatment natin sa ating step 1. I-multiply lang natin doon sa cumulative taxable temporary difference at cumulative deductible temporary differences yung bagong tax rate. So, dito, ang mga amounts na nakuha natin, yung deferred tax liability is equal to 375,000 and yung deferred tax asset is equal to 304,000. So, para makuha natin yung increase ng deferred tax liability at deferred tax asset, ganun din yung treatment na i-apply natin sa step 2. So, ililas lang natin yung deferred tax liability ng beginning period doon sa ending period and yung deferred tax asset ng ending period and beginning period. So, ang mga amounts na nakuha natin for this is 75,000 and 57,500. So, ayan. Para makuha naman natin yung net deferred tax expense, ay ilalas lang natin yung mga amounts na nakuha natin on the step 2, which is yung 75,000 at 57,500. So, magka-come up tayo sa amount na 17,500. And yung portion ng net deferred tax expense na 17,500 is related din siya sa decrease in net deferred tax liability as of January 1, 2023. So, para makuha natin yung 20,000 na net benefit, ganun din yung treatment na gagawin natin sa previous problem na ginawa natin. So, yung 120,000 times 30%, multiply lang natin siya doon sa sa percent na decrease, which is yung 5%. Then, magka-come up tayo sa 20,000 na net benefit. So, let's have another illustration. So, Gayora Company started its operations on January 1, 2023. During the year, the company reported accounting income before tax of 4 million. There were no differences in accounting rules and taxation rules except for the following. A. Accounting depreciation amounted to 2 million while tax depreciation amounted to 2.8 million. So, B. Warranty expense recognized amounted to 900,000 while actual warranty cost amounted to 600,000. Income tax rate is 30% for 2023. However, starting on January 1, 2024, the income tax rate was lowered to 25%. Requirement from the given information determine the total tax expense for the year 2023. So, para makuha natin yung current tax expense, accounting income before tax is i-add lang natin yung temporary differences para makuha natin yung taxable income. Then, i-multiply lang natin yung tax rate for the year na 30% para makuha natin yung tax expense. So, mag-start muna tayo sa accounting income before tax. Accounting income before tax, i-add lang natin yung excess warranty expense na 300,000 and ilas lang natin yung excess tax depreciation na 800,000. So, magka-come up tayo sa taxable income na 3.5 million. So, yung tax rate ng 3.5 million is equivalent to 30%. So, yung current tax expense natin for this is 1,050,000. So, para makuha natin yung deferred tax expense ng ending period, i-multiply lang nga natin yung bagong tax rate, which is yung 25% doon sa taxable temporary difference natin at the end of the period. So, 800,000 times 25% is equal to 200,000. Then, ganun din yung gagawin natin para makuha natin yung deferred tax income. So, deductible temporary differences, 300,000, multiply lang natin to sa bago natin tax rate, which is yung 25%. So, ang makukuha natin deferred tax income ay 75,000. So, yung net deferred tax expense for the year is 125,000 from the difference of 200,000 minus 75,000. Makuha naman natin ang net income after tax, ganun lang din yung treatment na gagamitin natin doon sa mga previous na problems na sinolve natin. So, net income before tax na 4 million, ilalas lang natin yung current income tax expenses, deferred tax expense, at deferred tax benefit. So, 1,050,000 plus 200,000 minus 75,000 is equal to 1,175,000. So, yun yung total tax expense natin. So, net income before tax less total tax expense is equal to net income after tax na 2,825,000. So, pagdating sa taxation, may mga times na ina-announce na already ng government yung mga pagbabago sa tax rate sa current period. Pero, itong pagbabagong to na rates ay mangyayari pa in the next period. Halimbawa, yung sa year 2024 to 2025, ang tax rate na daw is 25%. Whereas, sa year 2026 to 2027, magbabago ang tax rate, magiging siyang 28%. And sa year 2028 naman and 2029, ang magiging tax rate naman daw is 30%. So, depende yun sa provisions or laws na ibinababa ng government. So, ano nga ba yung magiging epekto nito sa deferred tax asset at deferred tax liability? So, yung mga pagbabagong nangyayari is i-recognize din siya, yung mga changes, i-recognize din siya sa deferred tax amount na liability and deferred tax amount ng asset. So, paano ba natin siya i-recognize? Let's have an illustration. So, during the last days of the year 2023, Shecampo Company incurred research costs totaling 4 million pesos. Since the costs were incurred during the research phase, these amounts were expensed outright in determining the accounting income. So, however, for taxation purposes, these amounts shall be amortized annually for 800,000 for 5 years starting in 2024. In addition, a new law was announced that will gradually decrease the income tax rate to 27% in 2024 and 2025, 24% in 2026 and 2027, and 20% moving forward. So, para makuha natin yung deferred tax asset ng end ng period, i-multiply lang natin yung amortized cost doon sa mga tax rates na nabago, no, per year, no, ayun ang per year. So, yung expected reversal during 2024 is 260,000. So, ang nangyari, 800,000 times 27% is equal to 216,000 dahil nga ang rates for year 2024 and 2025 ay equal sa 27%. Ganon din naman yung gagawin natin sa year na 2026 at 2027 at 2028. So, yun. So, makikita naman natin sa slide yung naging total ng mga amounts from changes ng tax rate. So, pag-usapan naman natin yung subsequent reversal of deferred taxes. So, sabi dito na yung effects ng temporary differences na kapag na-reverse siya, then yung deferred tax asset and deferred tax liability natin is magdi-decrease. Pero nakadepende pa rin siya sa temporary differences ng reversal kasi it can be one time or gradual. So, consequently, the reversal of deferred taxes and liabilities have the following consequences. So, makikita natin dito. So, scenario 1, reversal of deferred tax liability. Ano naman mangyayari kapag na-reverse yung deferred tax liability? So, magkakaroon siya ng deduction or credited siya from total expense. Then, kapag reversal of deferred tax asset naman, yung accounting consequences niya or accounting consequence niya is ma-debit siya or added siya sa total tax expense. So, para mas lalo natin maintindihan, let's have an illustration. On December 24, 2023, Pilagin Company acquired 3-year property insurance by paying 450,000. This insurance covers the period from January 1, 2024 to December 31, 2026. The taxation rules require this amount to be immediately deducted in determining the taxable income. In addition, the company reported accounting income of 2 million and 2.3 million in 2023 and 2024, respectively. There were no other temporary differences. The the company is subject to 25% income tax. So, paano natin gagawin to? So, makikita natin dito sa slide na to, yung carrying amounts and tax basis ng prepaid insurance as of December 31, 2023 and 2024. So, yung carrying amount at the end of the period ng year 2023 is equal to 450,000. Whereas yung carrying amount naman ng end of the period ng 2024 is equal to 300,000. So, ilas lang natin yung tax basis nito. So, since wala namang tax basis, ang ilalagay natin dito, then yung magiging temporary difference natin is magiging 450,000 at the year 2023 and 300,000 at the year 2024. So, i-multiply lang natin yung tax rate, yung nabagong tax rate natin, which is yung 25%. Then, yung magiging deferred tax liability natin for this is 112,500 at the year 2023 at 75,000 naman at the year 2024. So, take note lang ha, yung carrying amount is reduced by 150,000 per year. Kasi nga, yung 450,000, i-divide lang natin doon sa 3-year na coverage. So, there is a zero tax base since the whole 450,000 was already expensed during 2023. For the year 2023, there is a debit of 112,500 in deferred tax expense due to the initial recognition of deferred tax liability. On the other hand, in 2024, there is a credit of 37,500 from 112,500 minus 75,000 in deferred tax expense due to the partial reversal of temporary difference. So the effects of these deferred tax expense amounts can be further analyzed as follows. No? So, yung accounting income at the year 2023, ilalas lang natin siya dun sa outright expensing of 450,000 premiums under ng taxation rules. So, 2 million minus 450,000 is equal to 1,550,000. So, ganoon din ang gagawin natin para makuha natin yung taxable income ng 2024. So, accounting income ng ang 2024 is 2.3 million. I-add natin yung annual insurance expense recognized in accounting income but not in taxable income. So, 2,300,000 plus 150,000 is equal to taxable income na 2,450,000. So, para makuha natin yung total tax expense for each year 2023 at year 2024, yung taxable income na nakuha natin kanina is i-multiply lang natin ulit doon sa income tax rate na 25%. Then, i-add natin yung deferred tax expense in recognizing deferred tax liability at lilas natin yung credit sa deferred tax expense in reversing deferred tax liability. So, ang mangyayari dito, 1,550,000 times 25% is equal to 387,500. Add natin yung deferred tax expense in recognizing deferred tax liability na 112,500 and magkaka-up tayo sa total tax expense na 500,000. Then, sa year 2024 naman, yung taxable income niya is 2,450,000 times 25% na income tax rate and magkakaroon tayo ng current income tax expense na 612,500. Then, ilalas natin yung credit doon sa deferred tax expense in reversing deferred tax liability natin 37,500 and magka-come up tayo sa 575,000 na total tax expense. So, para makuha natin yung total tax expense for each year 2023 at year 2024, yung taxable income na nakuha natin kanina is i-multiply lang natin ulit doon sa income tax rate na 25%. Then, i-add natin yung deferred tax expense in recognizing deferred tax liability at lilas natin yung credit sa deferred tax expense in reversing deferred tax liability. So, ang mangyayari dito, 1,550,000 times 25% is equal to 387,500. Add natin yung deferred tax expense in recognizing deferred tax liability na 112,500 and magkaka-up tayo sa total tax expense na 500,000. Then, sa year 2024 naman, yung taxable income niya is 2,450,000 times 25% na income tax rate and magkakaroon tayo ng current income tax expense na 612,500. Then, ilalas natin yung credit doon sa deferred tax expense in reversing deferred tax liability natin 37,500 and magka-come up tayo sa 575,000 na total tax expense. So, let's talk about effective income tax rate, no? PAS 12 requires the presentation of the reconciliation of the statutory tax rate to the effective tax rate. Generally, the effective tax rate is determined as follows, no? Effective tax rate is equal to total tax expense divided by accounting income before income tax. So, para mas magets natin yung nangyayari dito, let's have an illustration. So, para mas magets pa natin, let's have an illustration. Using the same information as in Rebusoli Company, the effective tax rate for the year 2023 is determined as follows. So, total tax expense na 2,062,500 divided by accounting income before tax na 8,500,000. So, magkakaroon tayo ng effective income tax rate na 24.26%. So, generally, effective tax rate will differ from the statutory tax rate due to one or a combination of the following scenarios. So, number 1 is yung existence of permanent differences. Number 2 is existence of unrecognized deferred tax assets due to recoverability issues. Number 3 is existence of income subject to final tax or capital gains tax due to the differences between final tax rates or capital gains tax rates and the regular income tax rates. So, yung next slide natin is didiscuss lang siya ng summary ng theories na ginamit natin for the whole discussion. So, kayo na yung bahalang magbasa ng mga slides nito kasi mostly naman is self-explanatory na sila.